Hello and welcome back to the Modern Money YouTube channel. In today's video, I want to talk a little bit about that nasty CPI report that we got this morning, as well as what my personal thoughts are for the stock market going forward from here. Okay, so very first thing that I want to talk about is that nasty CPI report that we got this morning. Now, everybody knows that it was really bad. We came in really hot. We are actually at 1% month over month for all items and 0.6 month over month for even core CPI. Now, the actual expectations for core CPI were 0.5 month over month. And core, by the way, is the one that's most important if you're wondering, because according to the Federal Reserve, core CPI is the one that actually monetary policy is able to affect. All item CPI, that includes food and energy, those are just, apparently way too volatile measurements to actually be able to measure them and use them accurately to get a good hold on what inflation is really doing. So they like to strip that out of it to try and give themselves a better idea of if their policy making is actually working or not. And in this case, we're not seeing it working. We had possibly a little bit of a top showing in core inflation, but after this report, it just kind of put the nail in the coffin of that. Well, sorry, inflation isn't over yet. It is here to stay, and it is going to be a nasty battle. So now, why would this CPI report come in hotter on the month over month for core CPI and come in above where the actual consensus was? Well, I have a theory on that myself. So here's the thing. Even though they strip out food and energy out of the actual core CPI number, especially energy, in my opinion, can never be fully stripped out. When it comes to any of the things that are measured inside of core CPI, consumer discretionaries or, travel or lodging or shelter or any of these things, anything that's product related especially, there are energy costs basically associated with any of these businesses, right? Whether it's fuel or transport or actually the actual energy that goes to, keeping AC on in buildings and different things like that. So of course, it is almost impossible to totally get the energy factor out of the core CPI. And in my opinion, energy is what snuck into some of this core CPI reading and led things to go back up higher once again. Okay, so now that we've kind of addressed why we think that the month over month data kind of happened the way it did, what do we think could happen going forward? Well, the truth is, with inflation, we just don't know yet. We have seen some evidence that maybe we are getting close to the top of the growth rate at least. Obviously, it hasn't started slowing down as far as inflationary rates, but we are starting to get some indicators that, maybe things are going to start to deflate again, or at least inflation rates are going to come down again. We're starting to get more and more inventory. We're starting to see more and more people getting, job cuts from some of these earnings reports that we've been getting over the last earnings season. But the big one, in my opinion, is inventories, guys. Inventories are spiking, especially in consumer discretionary brand names, things like Walmart and Targets. They are just getting flooded with inventory. I mean, they have so much inventory that they just don't know what to do with. And the problem with having inventory is that as it sits on the shelf and as there's more and more buildup of it, things start to either, get broken or get lost or just get old, and there's new versions of things that come out that devalue the old inventory. And so having inventory for companies makes companies go, hey, maybe we should start dropping prices on things. And once companies start dropping prices rather than raising prices all the time, well, then we start to see this shift in inflation. So in my opinion, I really do expect inflation to start to come down here soon, but obviously because of energy and because of other factors that are affecting the core CPI, whether or not the Fed wants to leave it into the actual CPI number or not, it still gets in there and it still does affect it. So it's going to be really hard to know when we could actually start to see that number come down. But in my opinion, I feel like within the next 2 to 3 CPI reports, we should start to see a downward trend, at least in the growth rate of month over month CPI data. Okay, so now let's talk a little bit about what's going to be happening in the markets in the week coming, because quite frankly, it's probably still going to be pretty volatile. Next week is a big week, especially thanks to Wednesday, June 15th. We have lots of things happening. We are getting our economic projections from the Fed, and on top of that, the Fed is making their next federal rate funds interest rate decision, which is expected to be a 50 basis point hike. But after a nasty CPI report like we got today, people are going to be nervous coming up to this interest rate decision, because the Fed might go, you know what, this inflation is way too out of hand and we need to do a 75 basis point hike or maybe a full percent hike to try and get in front of this inflation. Things are just getting way too out of control and we do not want to see anything like that happen. And you never know when the Fed might shift their stance to actually become more hawkish like that. So in my opinion, especially leading up to Wednesday, we could see some real market volatility, but it also could make some really good opportunities to buy some of your favorite stocks on sale. Okay, well, what about after next week and going forward? Well, of course, there's always your standard things that are coming out with economic data. And of course, there's going to be a lot of those things that come out between now and next month's CPI report. I don't really need to go into those things because we will address them here as they happen on the Modern Money YouTube channel, which, by the way, if you do enjoy this content so far, do me a favor and hit that subscribe button down below. And go ahead and also hit that like button down below as well, as it does help get this video out to more people so more people can watch it. But anyway, going forward, I feel like even after next week, it is going to be a volatile month, guys. I feel like all of June up until the very next CPI report, and even for the next couple CPI reports, until we really do start to see a truthful decline in that inflation growth rate, it's going to be a hard market. It's going to be a volatile market until we really do get that clear indication that, yes, we have hit the top of inflation peak is in, and we can start to expect this thing to trend down. It's going to be a volatile and nasty market, guys. So if you guys aren't already subscribed, again, make sure you hit that subscribe button down below so you're here and you get my perspective on all things that are happening in the stock market as they do happen. I will be uploading more regularly. As you can see, I just barely updated my set. So if you like the new set, go ahead and leave me a comment down below as well. Tell me what you think. If there's anything that I should move in the background, I'm still trying to kind of decide that stuff myself as well. But anyway, guys, I hope that this week wasn't too crazy for you. I know that I myself am relaxing now on Friday, drinking a cold beer and enjoying myself, and I hope that you guys are doing the exact same thing. Anyway, everybody, I hope that you guys have a great rest of your weekend, and we will see you in the next video.